got so.
Assalamualaikum. In this presentation, we will analyze and compare the financial performance of Dialog Group Berhad and Velesto Energy Berhad, that two major companies in Malaysia's oil and gas service sector. Financial performance analysis is important because it evaluates a company's profitability, liquidity, efficiency, leverage, and market position. By examining financial statements and ratios, we can identify strengths, weaknesses, and overall stability. This study uses audited annual reports and applies ratio analysis to provide a fair comparison. Our main objective is to determine which company demonstrates stronger financial performance and how their different business model reflect competitiveness in industry.
For company background, Dialog Group Berhad was established in 1984 in Kuala Lumpur. It is listed on Bursa Malaysia under the Energy and Oil and Gas Service sector. Dialog Group Berhad provides integrated technical service for the oil and gas and petrochemical industry. The company has three main segments: first, EPCC; second, BMTS; third, TTRS, with a focus on recurring revenue. Key clients include Petronas, and it operates across Malaysia, Asia Pacific, and the Middle East. Its diversified business model includes strong financial stability. Next, Velesto Energy Berhad was established in 2005 in Kuala Lumpur. The company is listed on Bursa Malaysia under the oil and gas service sector. Velesto Energy Berhad provides integrated oilfield service to the upstream oil and gas industry. Its operations are divided into three main segments: first, drilling service; second, rail service; third, offshore engineering. Velesto operates mainly in Malaysia and selected Southeast Asia market with a strong focus on operational efficiency, safety, and technology. Velesto remains competitive in the capital-intensive oilfield service industry.
I will explain the methodology used in this study to analyze and compare the financial performance of Dialog Group Berhad and Velesto Energy Berhad. First, research design. This study adopts a quantitative research design using numerical financial data. This approach allows us to measure financial performance objectively. A comparative analysis is applied to identify similarities, differences, and performance trends between the two companies over a selected 2-year period. Sample selection. The sample selection for this study are Dialog Group Berhad and Velesto Energy Berhad. Both company operates in the oil and gas service industry and provide complete and reliability financial data. Selecting companies from the same industry help reduce industry-related risk and ensure a fair and meaningful comparison. Data collection. Secondary data were collected from annual reports published on Bursa Malaysia. The financial statements used include the statement of financial position, statement of profit or loss, and statement of cash flows. The data covers 2 consecutive financial years and all information was verified to ensure accuracy and reliability. Financial ratio analysis. Financial ratio analysis was used as the main analytical tool in the study. The ratio were grouped into 5 categories, which are liquidity, profitability, efficiency, and market ratio. All ratio we calculate using audited financial statements to ensure reliability. Analysis technique. The financial ratio we compared across the 2-year period. The result were presented using tables, bar charts, and line graphs to improve clarity and comparability. This analysis helps identify performance trends and weakness, as well as financial position differences between the two companies. The finding from the analysis from the basic for the discussion and recommendation in this report.
Today, I will be presenting financial ratio analysis for Dialog Group Berhad and Velesto Energy Berhad for the year 2024. First, I will explain the liquidity ratio. Liquidity ratio measures a company's ability to meet its short-term liabilities using its current asset. A higher liquidity ratio generally indicates a more financially stable company in the short term. The first liquidity ratio is the current ratio, which compares current asset to current liability. In 2024, Dialog Group Berhad recorded a current ratio of 2.44, while Velesto Energy Berhad recorded 1.27. This means that for every RM1 of current liabilities, Dialog Group Berhad has 2.44 sen ringgit of current asset, where Velesto Energy Berhad has 1.27 sen ringgit. This shows that Dialog Group Berhad is in a stronger position to meet its short-term obligation, making it less exposed to liquidity risk compared to Velesto Energy Berhad. Next is the quick ratio, which is a more conservative liquidity measure because it includes inventory. Dialog Group Berhad achieved a quick ratio of 2.34 while Velesto Energy Berhad recorded 1.01. This indicates that Dialog Group Berhad can pay off its short-term liabilities without depending on the sale of inventory. Therefore, Dialog Group Berhad demonstrated better immediate liquidity, which reflects stronger short-term financial health.
Next, I will explain the profitability ratios for Dialog Group Berhad and Velesto Energy Berhad for the year 2024. Firstly, we look at the gross profit margin. Velesto Energy Berhad recorded a much higher gross profit margin of 72.60% compared to Dialog Group Berhad, which recorded 14.36%. This shows that Velesto is more efficient in controlling its direct operating costs, while Dialog operates with higher cost of sale. Next is the net profit margin. Dialog Group Berhad achieved a higher net profit margin of 19.21% compared to Velesto Energy Berhad at 15.27%. Moving on to return on assets or ROE. Velesto Energy Berhad recorded a slightly higher ROE of 6.76%, while Dialog Group Berhad recorded 6.63%. This suggests that Velesto utilized its total assets slightly more efficiently to generate profit. Lastly, return on equity or ROE. Dialog Group Berhad achieved a higher ROE of 9.30% compared to Velesto Energy Berhad at 8.08%. That's all for profitability ratio.
Next, I will move to efficiency ratio. Efficiency ratio measures how effectively a company uses its asset to generate sale and income. Higher efficiency ratio usually indicate better management and operational performance. The first efficiency ratio is inventory turnover, which show how many times inventory is sold and replaced within a year. Dialog Group Berhad record an inventory turnover of 28.50 times, which is significantly higher than Velesto Energy Berhad 6.78 times. This suggests that Dialog Group Berhad manage its inventory more efficient and is able to convert inventory into sale at a faster rate, reducing holding costs and the risk of obsolete inventory. The net efficiency ratio is fixed asset turnover, which measures how effectively fixed assets are used to generate revenue. In 2024, Dialog Group Berhad record a fixed asset turnover of 1.13 times, while Velesto Energy Berhad record 0.57 times. This means that Dialog Group Berhad generate more revenue per ringgit of fixed asset, indicating better utilization of long-term asset compared to Velesto Energy Berhad.
For leverage ratio, first let's examine how these companies manage the debt. Debt ratio. This measures the percentage of assets financed by creditors. Velesto Energy shows a lower debt ratio at 0.16% compared to Dialog's 0.29%. While both are exceptionally low, Velesto relies less on debt to fund its asset base. For debt to equity ratio, looking at the relationship between total liabilities and shareholders' equity, we see a similar trend. Dialog stands at 0.40%, while Velesto is significantly lower at 0.19%. This indicates that Velesto has a more conservative capital structure. Time interest earned, TIE. This ratio tells us how easily a company can pay interest on its debt using its EBIT. Velesto leads here with a ratio of 19.43 compared to Dialog 11.48. Both companies are in a very safe position to cover their interest obligations, though Velesto has a larger cushion. For market ratio, earning per share EPS, this represents this profit allocated to each outstanding share of common stock. Dialog Group significantly outperforms here with an EPS out 10.19, while Velesto sits at 2.53. This suggests that Dialog is generating much higher value for its shareholders on a per share basis. Price to earning PE ratio. Finally, the PE ratio shows what the market is willing to pay for every dollar of earning. Dialog has a PE of 0.17, while Velesto is at 0.11.
For comparison, competitive analytics in terms of liquidity ratio, Dialog Group Berhad shows strong performance with high current ratio and quick ratio, indicating better ability to meet short-term obligation. Velesto Energy Berhad low ratio suggests high liquidity risk. For profitability ratio, Velesto Energy Berhad record a high gross profit margin, reflecting better direct cost control. However, Dialog Group Berhad outperformed in net profit margin and return on equity, showing stronger overall profitability and better return to shareholder. In terms of efficiency ratio, Dialog Group Berhad has significantly high inventory and fixed asset turnover. indicating more effective as an asset. Overall, Dialog Group Berhad demonstrated strong financial stability and long-term sustainability compared to Velesto Energy Berhad. Net leverage ratio. Dialog Group Berhad has had debt impressure, indicating greater financial risk. In contrast, Velesto Energy Berhad show a more conservative capital structure and a stronger ability to meet interest payment, as reflected by its high time interest earned ratio. Lastly, market ratio. Dialog Group Berhad record a most high earning per share, targeting better return to shareholder. Its slightly high price to earning ratio also indicated stronger investor confidence in its future growth. Although both companies face low market valuation due to industry uncertainty, Dialog Group Berhad offer more attractive to investor overall.
A comparison of Dialog Group Berhad and Velesto Energy Berhad in findings highlights how each company approached growth, risk, and operational efficiency differently in 2024. Starting with liquidity, Dialog shows stronger short-term financial strength. Its ratio indicates it can meet obligations without relying on inventory, demonstrating effective working capital management. Velesto, however, has lower liquidity, which limits flexibility in increased financial risk in uncertain oil and gas environment. Looking at profitability, Velesto leads gross profit margin, showing good control over direct costs. However, Dialog outperforms in net profit margin and return on equity, delivering stronger shareholder returns and efficient use of equity. Return on assets is similar for both, but Dialog's recurring income suggests more stable long-term profitability. In efficiency, Dialog is more effective with faster inventory turnover and better use of long-term assets. Velesto's operations are slower due to capital-intensive drilling activities. Regarding leverage, Velesto is conservative with lower financial risk and strong ability to cover interest payments. Dialog relies more on debt, which increase risk but also offer potential for higher returns if managed well. Finally, in market performance, Dialog's earning per share and price to earnings ratio are higher, which signally stronger shareholder returns and investor confidence, while Velesto is less attractive in the market, which despite its advantage in gross margin and low leverage. In summary, Dialog demonstrates strength across liquidity, efficiency, profitability, and market perception, which offers stability and growth potential, while Velesto stand up in cost control, low leverage, and risk management. These differences highlight the distinct business models of two companies in the oil and gas service sector.
Based on the result of our financial ratio analysis, several recommendations are proposed for both companies to improve their financial performance and long-term sustainability. First, Dialog Group Berhad. For Dialog Group Berhad, it is recommended that the company adopts a more conservative leverage strategy by maintaining a balanced mix of debt and equity. This approach can help reduce long-term financial risk while sustaining profitability. In addition, Dialog should continue to enhance operational efficiency, particularly in asset utilization, as this been a key contributor to its strong financial performance. Lastly, improving liquidity management is important to ensure sufficient financial flexibility without holding chief idly assets. Velesto Energy Berhad. For Velesto Energy Berhad, the focus should be on improving profitability through effective cost control and better utilization of asset and inventory. Given its strong liquidity position, Velesto is encouraged to use excess liquidity more efficiently by investing in income generation assets of strategic projects. Finally, management should prioritize sustainable profit growth and enhance investor confidence and create long-term shareholder value. These recommendations are aligned with the financial performance findings and aim to strengthen the overall position of both companies. To conclude, the financial performance of Dialog Group Berhad and Velesto Energy Berhad was analysed using financial ratio analysis. The findings show that Velesto Energy Berhad demonstrates a stronger liquidity position, better short-term financial stability, and lower financial risk. This indicates that Velesto is well positioned to meet its short-term obligations. On the other hand, Dialog Group Berhad demonstrates high profitability and operational efficiency. The company also shows better asset utilization, which contributes to its stronger market performance and investor appeal. Overall, Dialog Group Berhad excel in profitability, efficiency. And market performance, while Velesto Energy Berhad performs better in liquidity management and risk control. In conclusion, both companies possess distinct financial strengths with the oil and gas service sector. Thank you.